Welcome back to Trading Day. U.S. President Donald Trump's policy announcements continue to make waves, also in the oil sector. In his comments today to leaders at the World Economic Forum in Davos, Switzerland, Trump said he would push Saudi Arabia and OPEC to reduce the price of crude oil.
It's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
Donald Trump in Davos, Switzerland. For more on this, let's bring in Robert Yawger. He's an energy futures strategist with Mizuho Americas, a longtime favorite guest of this channel. He joins us from New York. Robert, great to talk to you. What do we make of Donald Trump trying to jawbone down the price of crude oil in terms of the Saudi influence on the oil market?
Well, they do have 5.8 million barrels of spare capacity. This is not ideal pricing for them right here, though. They would, in my opinion, the conversation starts basically when a U.S. barrel gets to about $82.50. That makes international Brent about $85, $86. At that level, I think the Saudis would maybe have interest. You have the chart up. You can see we're not at rip-roaring levels. We haven't been at rip-roaring levels in over a year. And I don't think that Saudis will take the bait and increase production or ask their OPEC partners to do it against these levels. It's just not cost effective for them. They're waiting for a higher price. I feel for the poor prince, or the king of Saudi Arabia. He was committed to $600 billion and then gets asked to cut his price of his oil. So that's an awful lot.
So the two sides are at odds. Trump not likely to get what he wants with oil prices where they are now, correct?
I don't think there's much of a chance that the OPEC's going to step out of the box tomorrow and say, we're adding 5 million barrels today. That's not going to happen.
Why is 82.50 the level at which OPEC would consider something like that?
They have certain obligations. The Saudis, for example, they have certain obligations to the society that they have to get X amount for their barrel in order to pay for all the gigantic infrastructure programs they have, social programs they have. Saudi oil coming out of the ground only costs a couple dollars, but it's really the only game in town. And because of that, you have to have a really high price to pay for everything that happens in Saudi Arabia. It's not here. It's not like here or in Canada where you have multiple, for that million, basically zillions of things going on at once that you're getting money from. That's not the case in Saudi Arabia. It's largely a one-horse show, and it's oil. They need to bring in a lot of money for the oil that they have.
A couple of wild cards that are out there are the possibility of renewed sanctions on Russia from the new U.S. administration. And as you've pointed out in some recent commentary, the idea of an attack on Iranian nuclear facilities by either Israel or the U.S.
Yes, I mean, now you're starting to talk about a little tick for tack type thing. If we are to impose more sanctions on Russia and they are effective, that's a big if. That would take as much as 3-4 million barrels off the market. That would have to be highly effective to reach that number. But if you did, then OPEC has 5.8 million barrels sitting around out there. The price would probably have rallied already. It would probably be in that $82, $87 wheelhouse, and they could bring back some of those barrels and in the process gain the goodwill of the president, for that matter. The Iranian situation, he's going to come out any day now and start to make an issue out of that, I would imagine, and for better or worse, whatever your view is on it. But that's 2 million barrels right there also that are basically sanctioned barrels that still find homes in countries that will take those barrels. They've traded at a very big discount, so you can't really blame it all that much on the countries that buy those barrels or getting them on the cheap. But yes, that's 2 more million barrels. Now, if both those things happen at once, then you're all of a sudden at 6 to 8 million barrels off the market, and then you have a problem. That's above and beyond the OPEC 5.8 million spare capacity. But he'll have to play that game. He'll have to feather that. And that's going to be something that will be figured out here in the future.
He draws a very direct link between the price of oil and the ongoing war in Ukraine. What's he saying? That Russia is able to finance its aggression in Ukraine through sales of oil and would be less able to do so if oil prices were meaningfully lower?
Yes, he's onto something there. There's no doubt about it. If they cannot finance the war, they have more income flow than Saudi Arabia does. But really, at the end of the day, not a whole lot, especially as they increasingly cut ties to the European Union. Russia, for oil, Russia is that's their bread and butter. So that's their number one thing. And they have to get a good price for that. They're also selling their barrels, sanctioned barrels for that matter, but they offer those barrels at a pretty good discount also. So their buyers are getting those probably at $2, $3, $4, $5, $6 cheaper than international Brent. That's a bargain. And if we impose sanctions where they cannot make those deliveries, then that takes some of the firepower out of the Russians' hands. They'll have less pop. They'll have more interest in freezing the conflict and taking what they've already gained and trying to negotiate a ceasefire, a peace deal that they see as good for them.
What price of crude oil would provoke that type of pivot in Moscow?
I think once you get down to $60, it was not going to, even if it got there, it wouldn't be like Putin goes out on the balcony one day and says, I got the red flag here, I'm done. It's not going to be like that. It'll start negotiations, but $60 is, in my opinion, and that's international barrels. So that's Brent. That's $57 WTI. That's where you start to have the conversation. That's beaten down. We haven't been that low in quite a long time, well over a year. We've been as low as $66 this year in WTI, so $70 more or less in Brent. But yeah, it has to get down to $60 in my opinion. That's where they really start to feel the pain. And it would be largely the same story for the Iranians too.
Okay, all kinds of moving parts in the oil market. As always, you've done a great job at detailing them. Do you have a forecast on where crude is going this year?
Yes, I think that we will have some spikes on geopolitical headlines. But at the end of the day, OPEC is still sitting on that 5.8 million barrels. The United States is pumping at the highest level of all time. There's a lot of crude oil out there. There's no oil emergency, energy emergency here in the States. We have a lot of oil, and we continue to have a relationship. There's 4 million barrels. We always get a little cheaper also. So, yes, I think we could have some spikes, but I think the average price on the year will be about $73 WTI.
Robert, thank you a great deal, as always. Robert Yawger is